All right, so we were just talking about President Trump in the Roosevelt Room. Just a while ago, he said, quote, potential Federal Reserve chair is here. Okay, potential Federal Reserve chairman is here. All right, so the person who is there is Kevin Hassett, standing in there. That is, of course, the economic advisor, Kevin Hassett, who's been widely discussed as possibly being the next Federal Reserve chair when Jay Powell steps down in May. This all happening at the Trump account meeting. Treasury yields pairing declines. Let's get right to the floor show. Siebert Financial CIO Mark Malek has $1.2 billion in assets under management. We should say Treasury yields have paired their gains. I think they were up a bit more. As we continue to look at this, Mark, there are a lot of things to unpack. We've got the Trump accounts, which would arguably pour lots of money into index funds over the next couple of years. What would that do to the markets? I feel like it would lift the indexes, right? Oh, absolutely. I mean, first and foremost, an investment of that magnitude is always welcome for the markets. But thinking about the broader implications of that investment, first of all, it is showing that these accounts, they're here to stay. They're very real. This is likely going to have other people line up and want to put in money as well. So the types of ETFs that these are going into, they seem to be sort of broad passive ETFs, is very, very positive. And in fact, again, you have to think about the multiplier effect of this, right? This public-private partnership that is very interesting. You're bound to see other private folks lining up to do the same thing. And I think the implications are extremely positive. So here on the screen, Trump versus Dell accounts. So Michael Dell, the billionaire who made his fortune in the 90s and the 2000s with Dell Computers, he is committing about $6.5 billion to this. His are a little bit different. For children born between 2016 and 2024, move about 250 into the accounts, must live in zip codes where the median household incomes are below $150,000 per year. So kids in Palm Beach are not probably going to be in, for example, that zip code district, or the fancy districts in Northern California where all the billionaires of Silicon Valley live. The Trump accounts are for babies born between 2025 and 2028. They'd get $1,000 created under the One Big Beautiful Bill. They must invest in diversified, low-cost U.S. stock index funds. And by the way, parents can't take the money out, but it really allows American children everywhere to capture what they don't right now, and that is compounded interest. Explain why all that money coming in would, of course, move things up here when it comes to the S&P, the Dow, the NASDAQ. We can put up actually some of these index funds. Yeah, I mean, again, the compounding effect, unbelievable. And I think I saw something earlier today that this additional 6.5 million committed by the Dells, well, I think they're estimating it's going to reach like 80% of children out there. So if you can imagine the long-term impact on that, right? Not necessarily your Palm Beach kids, but this is where it's needed most, and this is where it's most likely going to bloom, and we're going to see again returns. For example, here the IVV. This is the iShares. It mimics the S&P 500. 16% higher year to date. Now, just so our viewers know, it doesn't happen like that every single year. Some years, of course, if you think about the dot-com bubble bursting and the financial crisis, it fell. But that said, over time, age newborn to 18, they will capture a lot of increase. Absolutely. I mean, listen, the best advice you can give anyone is to invest early and get involved in the market, especially a lot of these kids, they don't have that opportunity. Listen, sadly, even kids who do have the opportunity are not putting money in the market earlier on in their lives. And this really is blazing the path for that very thing to happen. And this is where wealth grows in the future. So we're going to be talking about these very kids and this very $250 extra dollars, and then in 15 years, 20 years from now, and they're going to be much bigger numbers that we're going to be talking about. So let's talk a little bit about what you like right now, because if we're looking at what actually is working, you actually appreciate things like consumer discretionary, consumer staples, because the consumer, you say, is really holding up, even amidst all of the drama of the tariffs.
Yeah, they are. I mean, listen, we've been waiting all year for the consumer to finally crack. And in fact, they have not cracked, right? The consumer is still feeling positive. I mean, obviously, we're seeing some sentiment numbers kind of tumble a little bit. I wouldn't say tumble, but they're getting a little weak. But the bottom line is the proof is in the pudding. And when we look at consumption, consumption continues to grow.
Yeah, actually, these are not consumer cyclicals. And consumer discretionary, we know this. These are some of your other picks, NVIDIA among them. If we could put up the consumer names, like the Walmarts of the world. There you go. Year to date, really nice move here, up 24%. Year to date, a lot of these have done well, despite this concern that prices would be so high that the consumer would not do well.
Well, we just, just a couple weeks back, we got Walmart's earnings, and we heard again, that's where we're getting this anecdotal information that the consumers are healthy, right? So you're definitely seeing some consumers struggling a little bit at the lower income end, but they continue to consume, and we're hearing that from Walmart. And again, they're addressing that, right? They understand
Look at Ralph Lauren, nice move.
Yeah,
there.
the challenges that they were expecting earlier in the year, they're not seeing them. Like I said, we're waiting for that to happen, but it's just not happening.
Well, I'll tell you something, Mark. It's an interesting and certainly, I feel, correct move, these Trump accounts, because these viewers that we have, you guys are all interested in stocks, but a lot of America doesn't get to do that. And this would get them off on the right foot, at least if it works properly. Absolutely.
It's brilliant, and it is actually a perfect way to clarify this public-private relationship that Trump is forging.
Mark Malek, thank you very much.